Can you elaborate on that a little bit? Because I think for a lot of people, they may think, look, you borrow the money, you know what you're signing up for, you know you have to pay it back, but it's not that black and white, right?
No, it's not. I am willing to definitely make payments and pay back my loan, but every time it's like the interest grows so high that we'll probably be in debt forever for the most of rest of our lives. And also at the same time, with the higher cost, rising cost of food and everything else, I literally have to choose between, do I pay my rent, do I feed my children, or do I make this loan payment?
Oh, Christina, I'm sure there are a lot of people who are just like you, who are thinking, the numbers, the math isn't mathing. We thank you for sharing your story with us. We wish you the best.
Okay, so I wanted to take a pause there, and I'm going to stop the screen share. I want to address, and I had to move. Sorry, the internet connection was going in and out for some reason. I want to address the situation. So number one, at LoanSense, we definitely do not recommend calling your servicer to try to get a reasonable payment plan. That's just not going to happen. The way to get the best and most affordable payment plan is to submit the paperwork, create a paper trail, and submit the proof of income over the last 3 years. You can use different forms of income. So whatever income is the lowest over the last 3 years, your servicer will accept that. If you're in the pathway of default, they might ask for some budgeting numbers, but I would not call up the servicer or call up the Department of Education in hopes that they're going to give you the best payment plan. That's just not going to happen, because they're just going to say, what's your current income? If your current income is zero and you are filing your taxes jointly with your spouse, like in that viewer's situation, if they file their taxes separately, then her spouse's income wouldn't even count towards her payment, in which case she could legitimately get a payment of $0. I don't understand why she's calling up and getting high payments when she is earning no money. She should have a payment of $0 right now, and it should count as a payment. So that's a part of the segment I don't understand. Nobody is there telling her that. If she calls up the servicer or the Department of Ed and says, my husband's income is X, they're going to take his income and use it to count for her loans, when in reality is she could file her taxes separately and not even have to use her husband's income. That's number one. Number two is calling up the servicer and or the Department of Ed is futile, because the wait times are so long right now. And that's not the way to get the maximum help, because they're not going to help with submitting and getting an affordable payment plan. So I just want to say that, first of all, servicers are not your champions. They don't work for you. They work for their bottom line, which is to get you to pay and service your loan for as long as they can. And that means actually not getting access to forgiveness. So this borrower should pay for 20 to 25 years max, because she should already be grandfathered into the current income-driven repayment programs and literally be done paying after the 20 to 25 year time period, if she's not a public servant, which right now she's a stay-at-home mom, so I'm assuming she's not. But if she were ever a public servant and she didn't put her application into the public service loan forgiveness program and she paid under that, then she should have even less time.